Retail sales out this morning with an expected rise in retail sales. Will that potentially play well for the markets? We'll talk about that on 3 Minutes on Markets and Money. Retail sales expected to be reported this morning with an increase of 1% or more in terms of October retail sales. Now, a couple of reasons for that, of course, is October, one of the largest shopping days of the year as everybody prepares for Halloween, but also stimulus checks in California. In fact, California recently issued stimulus checks to help people deal with higher rates of inflation. But again, that fed into immediately more retail sales. So a big jump in California in terms of retail sales. That's going to feed into, because the state is so large and populous, that will feed into retail sales this morning, likely showing us a bit of an outsized gain in retail sales. Now, here's the problem with the data. Again, this is a one-off stimulus-driven event in California, but that strong number of retail sales will likely give the Fed confidence that, well, everything's okay in the economy, so we can keep hiking rates. So if a number's really too strong this morning, if it comes in well above expectations, that could actually bode poorly for the markets this morning, as expectations are that the Fed will continue to hike rates. There's no concerns about an economic slowdown and no reason for the Fed to slow down the pace of rate hikes to fight inflation. A much weaker than expected number, that could bode well for the markets. We could see a fairly decent pop on that number if we start to see signs that really the economy is slowing down a whole lot more. Amazon recently laying off 10,000 workers. Of course, we've seen a lot of tech companies do that. We've also talked about the Federal Express, Maersk, the shipping company, all starting to show signs of economic weakness. Ports are even talking about the slowest rate of activity since 2009. So economy definitely slowing down, but could be masked by these retail sales numbers caused by these stimulus checks in California. See, that's the problem with stimulus. It's not organic and it doesn't feed through to the economy for more than a month, right? Now that the money's gone, you're going to have a reversion in retail sales next month. However, with that, markets have had a very nice rally here. Last 2 days, markets are starting to show some signs of exhaustion as markets open up and then kind of sell off lower during the day. They're still ending up on the positive side of the ledger. Markets up about 1%. But yesterday, as an example, markets opened up very strong, up almost 2%. Concern about missiles fired into Poland sent the stocks down to basically unchanged for the day. They rallied back a little bit at the end of the day, but not get back to their highs. So again, starting to see a little bit of exhaustion here as this market approaches our target of 4,100. So we're getting close to that. Not a lot of upside left here. So again, start taking some profits here, reduce some risk. Indicators are getting overbought. So again, a bit of a correction here in the next 3-4 weeks won't be a surprise. So take a little bit of off the table, raise a little bit of cash, and we can also reallocate on a pullback. That's 3 Minutes on Markets and Money. We'll see you back here tomorrow.